Welcome back. Palantir stock has had a pretty rough week this week. As all of you know, heading into earnings, Palantir stock was about $25, and since then we've seen about a 16% drop from where expectations were previously before earnings. Now, I will definitely accept defeat here, as I thought Palantir's numbers were going to far exceed guidance and expectations. So, I want to make this very clear. I was wrong about the quarter, and that being said, I've lost a lot of money in the days since because I was positioned towards a massive beat that did not come. So we're going to get to that. Also want to say, in no way am I saying Palantir had a bad quarter. I think they certainly delivered solid results. It just wasn't that explosive quarter that I was expecting, given Alex Karp's really bullish comments that we've seen recently about the continuation of U.S. commercial. I was hoping a lot of that was going to translate not into the profits, but into the revenues, and so a bit of a mixed bag for the quarter, granted that they beat and came in line on EPS and revenue. So I want to show you actually what the analysts are saying following the conference call. We have William Blair, we have Wedbush, which is Dan Ives, and we have D.A. Davidson. So first of all, William Blair, underperform rating. They're bearish on the stock. What did they say? Well, the itsy bitsy guidance raise. Not sure why the highlighter is doing that, but basically they're saying really the results in their eyes came in under expectations. The revenue was above consensus, but again, everyone really expects that because this is what Palantir always does. And the US commercial revenue decelerated from the 71% last quarter. As we know, U.S. commercial is a major focus for Palantir investors because that is what is going to sustain the multiple. This is why I focus so much on it, why I showed in my last video all of the numbers in a spreadsheet and showing and plotting them along the way on the quarterly basis. So you might say it's unfair to judge Palantir quarter to quarter. I would argue it's not when you're trading in the 20 times multiple on revenue. Adjusted income came in above expectations. Their margins did well, actually. But I would argue we want to see growth from Palantir at this stage, not very mature margins. But, of course, I'm not going to say that's a bad thing. Palantir guided $651 million in the second quarter, compared with $643 million of expectations. So that implies revenue growth of just 22% in the second quarter. And they reiterated full-year guidance. They expect revenue of about $2.7 billion. And what I really want to just focus on from their analysis here is the graph that they have about Palantir's growth. So if I just zoom out, what we can see here is how Palantir's growth, of course, decelerated since went from all the way back when they did their direct listing. And then that's really what has led to the stock decline. And then more recently, of course, in addition to the macroeconomy, we've seen a bit of a recovery. But what's a bit concerning, and I say concerning in the sense of like, what do you think the stock is going to do in the next year? Because a lot of the long-term Palantir investors, not all of them, but some of them like to say, oh, well, the stock's down. I expected it to be down on earnings. Well, if you expect it to be down on earnings, I mean, it doesn't sound like you're very bullish. I am super bullish on Palantir, which is why I'm expecting them to do very well. And when they only say, oh, 22% growth for the year, that's sort of not what I am hoping for. Now, they always beat revenue. It's just a fact. So I know they're going to beat what they say they're going to do. But I really want to start to see a recovery up to that 30% range. I think 30% growth, we're going to see Palantir north of $30. So I would love to see that happen as soon as possible, but of course in a sustainable way. So if that happens next year and not this year, I'm totally fine with it, but it does need to happen at some point. If we stay in this 20% range, even if it goes up just a little bit, the stock is not going to appreciate and give good returns like we all want it to. So if you're a Palantir investor and you're expecting the stock to only give at least revenue growth of at most perhaps 20%, well, I would say this is probably not the stock for you. But that's what provides the opportunity if we do see 30+% revenue growth, because that's when you could see a stock price of $100 if they maintain that over 5 to 10 years, right? And even more than that at the 10-year period. So let's actually take this opportunity to read through what Dan Ives said after the earnings call. Revenue came in above the street's expectations and above guidance, driven by continued adoption of AIP across government and commercial, which is great to see that government is now interested in this technology. I'm just going to skip the parts that we already know about. We are laser focused on the AI story playing out with AIP leading the way and Palantir delivering robust numbers on this front yet again. We believe any modest sell-off post-print is a golden buying opportunity for this pure play AI name. We maintain our outperform rating and $35 price target, which is really great to see. Now, they raise a good point, right, about the 40%. And so you might think I'm being too harsh. 40%, that's great, because it makes it look a lot smaller. It makes it look like 20% when the government business isn't really growing at all, because that's sort of what's weighing down the growth rate. 40% is great, and I think they'll do even more than that to get the overall growth up. But just wanted to mention that. They're just talking about margins, which we already covered. Increasing guidance. Palantir raised its guidance and operating income. Some bulls hoping for an even bigger raise, which is sort of what you're seeing from William Blair. And the company continues capturing market share with AIP across both commercial and government verticals. And they're expecting government to reaccelerate throughout 2024. We continue to see increased momentum in the PLTR story, with AIP leading the charge in generating significant demand across both government and commercial, as we said, while well positioned to gain a large share of the $1 trillion opportunity with AI use cases expanding globally, exploding in their words. So these are their notes here. So it's always good to take a look at how their estimates changed before, looking at what their old estimates were and now what they are. So their old revenue of 642 changed to 651. So that's 20% to 22%, roughly. Their EPS didn't change. So, a pretty decent bump, but nothing crazy. And this is for the second quarter. And for the full year, 2.6 to 2.7, 2.66 to 2.68, okay. 19.5 to 20.6, so, about a 1%, which again, still pretty good. And this is where you can start to see some of the conservatism or some of the sandbagging, if you will, because Wedbush had to raise their Q2 by 2% almost, but they only raised their full year by 1%. And that full year is driven based on Palantir's guidance. And so if Palantir is going to grow 2% faster, just in a relative sense, if you run with me here, in the second quarter, but why would they only be 1% more in the full year? Now, of course, this is based on Wedbush, Dan Ives, their expectations, but if you see what I'm saying, if they're raising second quarter by 2% and only the full year by 1%, that means Palantir's probably going to grow faster than that 1% because compounding growth and all of that. And I would not be surprised if we see a 2.8 to 2.9 billion in revenue versus the 2.7 that they're probably going to be pretty close to with guidance, because they do like to beat it. And this is even more important because we have expectations for 2025, which when we get to the back half of this year is what the stock is going to be priced off of in terms of a multiples basis. We have 3.289 changing to 3.309. Okay, so that's actually a decrease if you look at it on a percentage basis from growth. I don't know how they come to that conclusion, because 3.29 is less than 3.31. Maybe I'm missing something, but maybe they meant to say 24.3 instead of 20, and so there definitely is an increase, nothing crazy, right? But some sort of increase, unless I'm just an idiot and missing something. So let's leave that there and head on over to D.A. Davidson to wrap this up with what we're expecting. Their price target, $24, so they're pretty neutral on the stock, but they did actually raise their target from $19 to $24, citing the strong results and the acceleration, U.S. commercial, which grew 40%. Again, a lot of the same stuff, so I'm just picking out what is more relevant. Palantir continuing to drive additional margin expansion and operating leverage, which we'd love to see. As a reminder, Palantir remains eligible for inclusion in the S&P 500. I would be pretty surprised if they're not included by the end of this year, but you never know. Palantir scores in the 93rd percentile of our software coverage on the rule of X, which I think they're referring to the rule of 40 here. Something around there we could say is a similar analysis. See, they're doing a 16 times 2025 revenue, and that's how they get to the $24 per share. So this is very important. If Palantir is able to be conservative on their guidance for 2024, because that's what people are basing it off of for expectations for 2025. If they can deliver 2.8, 2.9, now it's not going to be $3 billion in revenue, but closer to something that might resemble that, That's where we're going to see the explosion when, as you'll see here, we get to that and we're pricing, 15 times 3 billion. Higher revenue, higher multiple, higher share price. So that's going to do it for this video. Hopefully it was helpful. We saw the bear case, the bull case, and more of a neutral case. So I'd love to hear from you what you are thinking about who's actually making more sense here. Until next time.